So what we were, looking at, just to repeat this so that it gets recorded, income deemed to be received in India is been defined under Section 7. So there are some more cases which I have not discussed, but the first case which we have already discussed is that means the contribution is in excess of 12%, of salary, which has been contributed by the employer and it goes into your recognized provident fund, is treated as income deemed to be received in India. Similarly, any interest which is paid on that contribution in excess of 9.5% will also become income deemed to be received in India. Now, under Section 9, there are instances where which is considered as income deemed to accrue or arise in India. First is income from business connection in India. So I gave an example. Suppose you are a lawyer and you have gone abroad and given some services and you receive money in say pounds, say $10,000 pounds. So that money will be taxed in India. It will be assumed that the income has accrued in India. Now read this.
Income from any property, asset, or source of income situated in India.
Now, if you are living abroad, many of us, migrate to other countries and we have properties in India. So maybe that we are getting some kind of a rent or some kind of income from the property which we have in India. So all that money which you are receiving will be income which is deemed to or accrue or arise in India. So you have to pay tax in India and not abroad for that money. Okay. So income from any property, asset, or source of income situated in India. Okay. Next.
Income from the transfer of any capital asset situated in India.
Suppose you have a piece of land. You are living abroad, and you have bought it during your time when you were in India, or your ancestors bought it. So you came to India and sold that land, okay, and you earned some money, okay, a capital gain, which is called like suppose the cost of that property was say 5 lakhs, and you sold it for 50 lakhs. So that means you are making a gain of 45 lakhs. So that is the income from transfer of capital assets situated in India. So even if you are living abroad and you are a non-resident, so the income will be treated as income deemed to accrue or arise in India in such case.
Any income which falls under the head salaries if it is earned in India.
So, if you are having any income and you're by way of salaries, so it will be treated as that it is a income within India. Why it has been included here? If you read this, it will be clear.
Salary payable by the government to an Indian citizen or national for services rendered outside India.
So, many of Indians who are working abroad, they are the government employees. They are working in in the Indian embassies and other places, or like World Trade Organization or WHO. So they are getting salary paid by the Indian government. So all that money which they are getting, they will be taxed in India for the money which they have been paid by the government. So because it will be income which is deemed to accrue or arise in India. Okay. So let's go back to again to the same slide. So, that means income received, deemed to be received, accrued or arisen, deemed to accrue or arise. So that's why so many words are being used and they are being defined under section 5, 6, 7, 8, 9. Of course, I've given some glimpse of, some of the incomes which have been there, which are very easy for us to understand. There are some more which you can just go through, while you're going through your book. So in short, all the global income is taxable for a person who is resident. Now, we call a person who is resident as resident and ordinary resident. There are two classification of resident. One is resident and ordinary resident. Another is resident but not ordinary resident. So again, in this case also, the income received or deemed to be received, accrued or deemed to accrue arise in India. The same case as in the case of resident, all the income will be taxable, which is arising in India. Okay. But then income which accrues or arises outside India, being derived from a business controlled or from or set up profession set up in India. So which means apart from that, if you are earning any money, which is coming to you in out of India, okay, but it is from a business or a profession which is set up in India. So in that case, an example of an advocate which I gave. so which has some business connection or control from India, so that income will also get taxed for a person who is called resident but not ordinary resident. But in case of a non-resident, only income which is received or deemed to be received or accrued or arisen or deemed to be accrue or arise in India, this income will be only taxable for non-resident. So that means all income which is being received in India, deemed to be received in India, accrued or arisen in India, or deemed to accrue or arise in India, will be taxed, in the hands of all the persons, whether they are individuals, whether they are resident or whether they are non-resident. But in case of income which is being, coming from abroad, will be taxed only in the hands of the resident and ordinary residents. That which means the person who is resident, he has to pay tax on each and every income, whether it is been coming, whether it has been arisen in India or received in India or abroad. But in case of resident but not non-resident, all income which he has earned abroad will not be taxable in the hands of this guy, only except where a business is been set up or controlled in India. Only that income will be taxable. Otherwise, even the income which is earning from outside will not be part of his scope of total income. Similarly, non-resident, the income which is he is earning abroad will not be taxed in India. So the only difference in case of resident but not is only that income which is taxable, though it is arisen outside, but it has some connection from India. Okay, because the business is either controlled or the profession is set up in India. Okay, so now we'll just go to the Excel sheet. So please open your Excel sheet now. So we'll do a question. Okay, and so open this Excel sheet. Go to question number 1. Have you opened the question number 1? Kajal?
Yes, sir.
Kajal, आपने खोल लिया? किशोर?
Yes, sir.
Okay, Kishore?
Yes, sir.
Acha.
Yes, sir.
Now, this is question number 1. Okay, fine. So Kishore, can you read the question?
Mr. Ramesh and Mr. Suresh are brothers and they earned the following incomes during FY 23-24.
Okay, sorry. Is that getting recorded? I was just looking at. Just hold on. It's getting recorded. Yeah. Okay. Read it. Again, read it, please.
Mr. Ramesh and Mr. Suresh are brothers and they earned the following incomes during the FY 23-24. Mr. Ramesh settled in Canada in the year 1996 and Mr. Suresh settled in Delhi. Compute the total income for assessment year 24-25 under both the default regime and old regime and advise which should be opted by both the SSAs.
So, what I have done is that, I've just changed this question a little bit, though this was part of the CA study material. But I have said that, first of all, we have to compute both the guys' income, Ramesh and Suresh. Okay. Now, Ramesh is settled in Canada. That means he's a non-resident. Okay. Because he's been settled, since 1996. So he has never, so he's a non-resident. And Mr. Suresh is a resident because he is in Delhi. So we are presuming that Mr. Suresh is a resident and Mr. Ramesh is a non-resident. Is that clear? Now, we have to calculate the income under both the schemes, under the default regime as well as the old regime. And then we have to advise, what kind of a regime, what kind of, option he should go for it. Okay. Now, the default regime is basically, I'm going to discuss that, and old regime. So we are going to again cover that. So first is, read this, Kishore.
Interest on Canada development bonds, only 50% of interest received in India.
So tell me if
Mr. Ramesh,
Suresh has got how much?
40,000.
And Suresh is settled in Delhi. So will it be taxable in his hands?
Yes.
Okay. And what about this? I mean, anyone? Ramesh has got 35,000. Read it is.
That won't be taxable.
That won't be taxable. But he has, read this.
Interest on Canada development bonds. Only 50% of interest received in India.
So he has received, though he's a non-resident, but this money has been received in India. Of course, if he's a non-resident, though his income which is, earned abroad will not be taxable. But if it is received in India, it becomes taxable, isn't it? So if you go here, the first part, what is there? So I'll put a plus sign here and go to my question, okay, and choose this and add only 50%, okay. So only 50%, which is 17,500, will be taxable, okay. Fine. Some money which is received in India is taxable, okay. For example, income which is received or deemed to be received. So I'm just showing you that particular chart where we did. So read in case of non-resident, the last box.
Income received, deemed to be received, accrued or arisen, deemed to accrue or arise in India.
So that means any income which is received in India, he has to pay tax. Okay. So in this case, he is non-resident. Okay. So what we are doing, we are computing the total income of Mr. Ramesh and Mr. Suresh for the assessment year 24-25. The first was income interest on Canada Development Bond. So 17,500, which is 50% of the amount which is given here, which is how much? 35,000. So he has to pay tax on 50%. Is this clear to everyone? Kishore,
Yes,
is it
sir.
clear to you? Suraksha, Kajal, Diya?
Sir, I have a question.
Yeah.
Sir, I just want to understand when we are telling that received in India, so it is like receiving in our bank accounts.
Just hold on. Just listen it here. Read this again. Kajal, is it Kajal?
Yes, sir.
Read.
Interest on Canada development bonds, only 50% of interest received in India.
So which means that the money has been received directly into India, okay, in his bank account, Mr. Suresh.
Okay.
If Mr. Suresh would have got, sorry, Mr. Ramesh would have got this amount in England, or sorry, in Canada, but he would have brought that money in India, then, he doesn't have to pay any tax. Suppose this entire money was received in Canada, okay, and he
Okay.
brought this money, he transferred this money to his, his own account in India. In that case, it won't be taxable at all. But in this case, the money was directly received in India, okay, uh, from the, the bond, the bond was payable. So he opened his account and he says that directly credit that amount in my Indian account. Okay, so this
Okay.
money was received in India. If he would have received this money in an account outside and he would have remitted this amount back to India, then in that case, he doesn't have to pay tax on 35,000.
Okay.
So you can always advise Mr. Ramesh that he should receive this money in Canada, okay? And if he
Mm.
wants that money to come to India, he can transfer it his own account. So in that case, he doesn't have to pay any tax, okay? So we are going to
Okay.
discuss that very soon.
Okay.
Fine, I'm going to tell you about that, okay? So is this clear?
Yes, sir.
Okay, then read this, Kajal, second one.
Dividend from British company received in London.
So tell me, Ramesh is NRI, isn't it? Ramesh is what?
Hmm.
Yeah, Ramesh
Uh,
is, settled
uh,
in Canada. He's NRI and these Canada. So what will happen in both cases? Will they have to
sir,
pay tax?
for Ramesh, he doesn't have to pay tax. Suresh has to pay tax on the whole amount.
Because, yeah, entire 28. So he doesn't, 28,000 will not come. Okay. So if you look at, there will be no tax here. But Mr. Suresh, because he is a resident, his entire income is taxable. Okay. Fine. So then now, anyone, Anuj, read this. Or Manu, if Anuj is, inaccessible. Manu, are you there?
Yes, sir.
How?
Profits from a business in Nagpur but managed directly from London.
So 15 lakhs and 16 lakhs. So tell me, now in this case, there's a Ramesh, he's got 15 lakhs, okay? And Suresh has got 16 lakhs. Profits from a business in Nagpur. So what will happen? Do they have to pay tax in India for these incomes, Ramesh and Suresh?
So Suresh has to pay tax because it will be an Indian company, and I think so Ramesh also, because the business is in Nagpur, so it would be an Indian company, registered Indian company.
So is that
And
Suraksha?
Yes, sir.
So like look at this, both the guys are going to pay tax. Okay. So Manu, Is it clear to you?
Yes, sir. It is situated in India, so we have to pay
So
tax.
Abhi, Manu, now read this fourth one.
Short-term capital gain on sale of shares of an Indian company received in India.
It will be.
So what will happen?
And it will be taxed for both.
Tax for
Both will be taxed.
absolutely.
Yes,
So
sir.
let's go back to and say 60 and 90,000. So 60 and 90,000. Okay, fine. Okay, and then we go to the question number 1. Okay, who is going to reach? Who is going to tell me? कौन है? Tejasvi, are you there?
Yes, sir.
Tell me. Income from business in Chennai.
So that's 80,000, which is just.
Income from business in Chennai will be taxable in both Ramesh and Suresh has to pay tax, or will it be exempt in the hands of Ramesh and Suresh?
So it will be there.
There what?
So they,
Will it be taxable or not taxable?
so it will be taxable.
It will be taxable. So that's so 80,000 and 70,000. Kajal, tell me, you're getting this ref sign here. I mean, of course, it was not there in the morning, so maybe we'll check that. Okay, fine.
No, sir, I am not getting it on in my
Okay,
screen.
so maybe I'll again reload I'll download and again start. Okay, fine. So question number 1.
Okay, sir.
Fee from technical services rendered in, who is going to, take care of this? Who else is there in the class?
Arvind.
Arvind, yeah, or Sanchit or Arvind, 2 people. Fee, Arvind
Yes,
will
sir.
answer this. Sir, fees for technical services
Yeah.
rendered in India but received in Canada.
But received in Canada. Sir, he have to pay tax on this because
He is
service are rendered in
though
India.
Ramesh is a non-resident.
Ramesh, yes, sir, but he had to pay tax on this.
Rent received, interest, fee for technical services rendered in India but received in Canada. Maybe it is received in Canada. It's not, but this is a income coming from India, so he has to pay. Okay. Sanchit,
Yes.
Sanchit, are you there?
Sir, interest on saving bank.
तो एक सेकंड पहले हम ये देख ले चलो से हाँ देखें इंटरेस्ट ऑन सेविंग बैंक या
Deposit in UCO Bank, Delhi. Sir, in this they have to pay taxes. Sir, 7,000. I think they don't have to pay on the 7,000 because less than 10,000 is exempted.
Absolutely, that is okay, yeah, but they are both taxable in
But he have to pay tax on 2,000.
yeah ठीक है, you are right. First we will include this. First we have included, then we'll get them the exemption here at the bottom. Okay, fine, here
Yes.
as you said.
Yes, sir.
Okay, so then who else is there? Good. Now Sanchit, again, agriculture income from a land situated in Andhra Pradesh.
No.
Sir, it is exempted from the taxes.
Okay, it is exempt. Yeah, so agriculture
Both are exempt.
yeah, agriculture income is 0, no tax. Okay. Then we go to okay, Kajal,
Yes, sir.
read this.
Rent received in respect of house property at Bhopal.
1,60,000. Will it be taxable?
Yes.
Just say taxable or non-taxable.
Sir, it will be taxable.
Okay, so now what we do is we just go to this in rent receipt from Bhopal. So what we do is basically we just go to this thing and my formula has been gone here, so I'll just put 30% here because you get an exemption of 30%. I'll just tell you that. Okay, just let me just complete the formula. I don't know why it is. Or what I'll do, I'll just this is D23. D23. ये क्या हो गया? Why it is not coming?
अच्छा रेंट रिसीव्ड का वैल्यू चली गई
हाँ
रमेश में रेंट रिसीव्ड की वैल्यू इज नॉट देयर
ऊपर वाले में नहीं है?
नहीं, नीचे वाले में नहीं है।
कहाँ पर है रेंट रिसीट? हाँ, यहाँ नहीं है। अच्छा ठीक है, तो मुझे यहाँ से पहले लानी पड़ेगी ना।
So you can download this file again and then you
नहीं,
can
हो गया बस
share
यही
it
प्रॉब्लम
with
यही
us.
थी सर, it was got missed out. Okay, I could have done that. Now it is come back. Okay, fine. So what is there is that rent receipt. Okay, so that means now I have to give a here
Hmm.
rent receipt is how much?
100.
1 lakh. Okay. Now in this case also we have to put this. Okay. So now in case of rent, what is the rent receipt for Ramesh? 1 lakh. Suresh, 60,000. So as per income tax, there is a 30% reduction which is given to you. Okay, fine. So which means that you will be only paying tax on 70,000. So what I'll do is that I am going to copy this from here. Okay, this. So I'm just going to exclude this and bring this. अब क्या हो गया?
Sir, it won't work that way because वहाँ जो फॉर्मूला था वो 1 लाख ऑलरेडी हमने यहाँ पर यूज कर रखा है।
अच्छा, ये
तो
वाला.
ये वाला
Okay.
हाँ,
That
तो
you're
यहाँ
saying.
जो
So I have to link from
यहाँ
there.
जो
Okay, I have to link from here.
यस
अगर मैं
सर,
यहाँ
यहाँ
से लिंक
वाला
कर
मैं यहाँ
देता
से
हूँ
link करता हूँ,
तो अब नहीं होगा,
तो हो जाए।
वो सर्कुलर रेफरेंस हो जाएगा नहीं तो.
हाँ, अब हो जाएगा सर ये।
ओके, सो नाउ आई हैव टू जस्ट, ये हो कैसे गया मुझे समझ नहीं आया. Okay, fine. So now you can
Yes.
understand that if you have a house or any property, whether it's a commercial or a residential, you are getting rent. Okay, so the government says that 30% deduction will be given on whatever money you are going to receive, and balance amount will be taxable in your hand. So this is a relief which is given by the income tax. So maybe we'll discuss when we do income from house property, but as of now you can understand that this 30,000, 18,000, which is 30% of the total rent, they'll get exemption. So rent receipt from Bhopal will be this much. Is that okay? Now,
Yes, sir.
what
Yes,
we
sir.
have to do is, so we have arrived at the total income. Okay, this is the gross total income. So what we do is basically we just calculate the total of it. So we can just look at the formula. So this is basically the entire income here, and here also this thing. So entire. Okay, is this clear to everyone?
Yes.
So I'm just going to remove the arrows now. So this is their income, okay, gross total income. And this will be called the default regime. Now, under the default regime, which is included from this budget, from the budget which was presented in 2024 by the Sitaraman, she said that this, will become the default. So you don't have to take any, deduction. Of course, you can take the house property deductions, okay, but you can't take any. There are certain deductions which have been barred, okay, and the tax have been lowered now. The tax rates have become lesser, so you pay tax as per this scheme, and it will be called the default scheme. But if you want to move to the old scheme, then you are allowed certain deductions. So there are some deductions under chapter 6A. Okay, fine. So which is like 80C and 80TTA. Okay, so which are section 80C, where you basically contribute, you pay some life insurance premium, which I have included here. Just go back down the line. 80C. These deductions are available only to individuals and HUF. 80C. So maximum, read this, Kishore.
Maximum deductions allowed under Section 80C up to 1,50,000 can be claimed as deduction every year from the gross total income deduction.
And
Those
on
could be
what?
life insurance premium, ELSS or ELSS scheme, PF contributions, etc.
So there are many more. So I just put them. So if you have contributed some money as into the life insurance premium, you can take an exemption up to 1,50,000. And what is ATTTA?
Provides a deduction of rupees 10,000 on interest income from savings bank.
So if you are earning some money on a saving account, that interest will be exempt up to a figure of 10,000. Suppose you earn 5,000 rupees interest. So then you don't have to pay any tax on that 5,000. But if you're earning 15,000, then you have to pay 5,000 rupees. You have to show it as in an income. Okay. So coming back to this,
Sir, the PF that the employer deducts 12% from employee and 12% from employer. So that entire amount is eligible for deduction.
I'll just show you this. Okay. So just go to the exemption income under section 10, which is the sheet number 1, question number 1 से पहले है. तो इसको आप यहाँ पर जाके there's a this thing. So you just go and go to this. I'll just going to show you that what are exemptions under section 80. So just go and open this file. So which I have already shown that here. So this you can see, this is the same this thing. So section 80C, are you able to see that on your screen?
Yes, sir.
So 80C, what is, read all of that?
Payment towards life insurance premium, provident fund, repayment of housing loan, national savings certificate, ULIP plans, accumulated time deposits, investments made in debentures, shares of companies, educational expenses, then equity linked savings schemes or mutual fund approved by CBDT.
Okay. So that means if you are putting money in any of these areas, you can take a cumulative limit of 1,50,000. So either you are contributing to life insurance premium or your provident fund contribution, which is you're giving in your employment when you're working in a company. So your own contribution is going, okay, so you can take that. If you are taken a loan, okay, and you're repaying that loan, suppose you have taken a loan of say 10 lakh rupees and you're paying 50,000 rupees loan repayment, so that will be counted under a limit of 1,50,000. Okay, fine. So all these schemes are eligible. You can even buy a national saving certificates. You might have seen that
Provident fund,
national saving certificates to save your taxes. So this comes under 80C. Yeah.
Sir, in provident fund, only our contribution will be eligible, or the contribution of the employer will also be eligible?
No, only your contribution, not the employer contribution, because that employer contribution is your income. Okay, fine. So, sorry, I mean your own contribution will be eligible for this provident fund. Okay, fine.
Only our contribution of 12%.
Your own employee's contribution and not the employer's contribution. Okay.
Okay, sir.
Fine. So then we have so many exemptions, like we have 80CCD, 80T, 80DDB, like 80TTA is also there at the bottom. Okay, read 80TTA.
Deduction in respect of interest on deposits in savings account, rupees 10,000.
So there are a lot of exemptions. Even if you take a medical policy on yourself, suppose you fall sick or you're hospitalized, then the reduction respect of read this 80D.
Deduction in respect of medical insurance premium.
Suppose you are you have taken a medical insurance policy for yourself, or your parents might have taken a policy for the family. So 25,000 for self, spouse and children. So you get a deduction of 25,000 rupees. 25,000 for parents less than the age of 60 years and 50,000 for the parents more than 60 years. So you get, if a person has taken a policy for the spouse and self and children up to 25,000, that will be, you will get an exemption. You can take another 25,000 premium for your parents who are less than 60 years. But if your parents are more than 60 years, then you get a benefit of 75,000, 25,000 and 50,000. Otherwise, you get 25 plus 25. But for your own and your family, only 25. Okay? Is that okay? So we'll just go back to the question. So this is 80C. Then, we have one more. Okay, so this section 10. Just open this also. Open this also. Copy and paste and open it. I have already opened, so I'll just show you. Okay, so this is section 10, which talks about income exempt from taxes. So it is basically all the incomes which are exempt. It's a very, very long section, and it tells you, what all incomes are you seeing this?
Yes, sir.
So all the incomes which are you are earning, but you don't have to pay any tax. The first one is what? Let's see. Read this, Kishore. Section 10.1. Section 10.1.
Section 10(1) of Income Tax Act. Section 10(1) of IT Act provides for the exemption of agricultural income earned by a HUF or an individual from income tax. However, it should be noted that this exemption only applies to agricultural income and not to income earned from activities such as dairy farming, poultry farming, or any other animal husbandry activity. The term agriculture income is defined as income earned from agricultural land situated in India. This includes income from agriculture, any process used for cultivating the land, including tilling, planting, and harvesting of crops.
Okay, so
Rent or
Kishore, okay,
revenue.
fine. Now here it says that you all agriculture income which you have earned from a land which is being used for agriculture purposes in India will be exempt. Now it should be in agriculture land. You can't use a land in Gurgaon or Delhi and say that I'm earning some agricultural income. So only agricultural land which is classified as an agricultural land by the income tax rules only comes under that. And it cannot be for your dairy farming or poultry farming and other animal husbandry activity. It can be only for growing, crops and other things. Okay. So agricultural land has been defined. Okay. Agricultural land situation in India. So what is agricultural land? It has been defined under the income tax, and the income will not include dairy farming or poultry farming and other things. So only agricultural income will be counted for the purpose of that. Okay. So let's go back to the question again. So you can just go through this and see other exemptions. Okay. So then, which means that your income is 18 lakh 34,000 and 19 lakh 14,000. This is your gross total income. Without claiming any deduction, the income will be called GTI, and it will be called default scheme. Okay, default regime. Now the government wants to promote default regime. They don't want that people should take exemptions. They should pay full tax. So they have lowered the tax rates now in India, and they say that the default scheme will be where you have to pay tax on your gross total income without taking any deductions. Now, if you take deductions under chapter 6A like 80C or 80TA, so then you get a total income, which will be called the old regime. So you have calculated the tax as per the new regime as well as the old regime. Okay, fine. So now you have to calculate the tax under both the schemes. Now, what is the tax, Kishore, as per the old regime? In case of the first SSC is what? Ramesh. Okay.
Ramesh,
रमेश का
non-resident.
कितना टैक्स बनता है ओल्ड डिफॉल्ट से?
2,60,364.
And what is the tax as per the old regime?
375, 180.
So which regime we should go for? Old one or new one?
Default.
Default, which is the new one. So the government
New
wants that
one.
you should go for the new one. So we'll go and see how it has been calculated. Similarly, in case of Suresh, what is the scheme? What is the tax as per default regime?
285, 168, and for old regime it's 3,89,688.
So the default is basically the new regime. So the tax is lesser. So in both the cases, the tax is less as per the default. So you should advise both Ramesh and Suresh that they should go for default. So let's understand how the tax has been calculated. Let's move on to this sheet.
Sir, I have a doubt.
Yeah.
So, isn't in the last class or in any class you mentioned that I can update whichever regime I'm choosing every year?
Actually, you can always choose the regime, every year, but the government says that, the default regime now, which has been the new regime, this will be applicable instantly. But if you want to change, Then you have to make and give your option that you want to go for old scheme. Okay.
So every year I have an option that if my taxes are lower in the old regime, I can pay taxes on the basis of the old
Absolutely.
regime.
And we'll just, yeah. I mean, Suraksha, you're right. And we are going to just see, we are going to see that itself, okay? And because this is an Excel sheet, so I've just made it this thing, and we can change the figures and we'll find which scheme is better, okay? In this case, it looks as the figures which are there, the default scheme looks to be better, whereas the old regime is giving you more tax, okay? So let's go here to the old regime. So this is old regime, this is default regime for Suresh, okay? So I have taken this number 18,74,000 from here. Okay, this number 18,74,000 old regime, and this is the new regime. Okay, so I put here old regime and new regime. Is that okay?
Yes, sir.
Yes, sir.
Now let's calculate tax on the first 2,50,000, zero tax. First, let's focus only on the old regime, no tax. The next 2,50,000, 5%. So 12,000, is the tax, okay, which is this. Then we go to the next 5 lakhs, 20% tax. So which is 1 lakh. So on 5 lakh, 20%, 1 lakh. On the remaining, because it is total amount is 18,74,000. So the balance is this amount, which is, calculated like this, which is, this minus these, all this. So you have 8,74,000 on which we have to pay 30% tax. So 30% is the highest slab under the old regime. So up to 2,50,000, zero tax. Up to 2,50,000, no tax. Apart above 2,50,000, you have to pay 5%. And between 2,50,000 to 5 lakhs, for the next 5 lakhs, you have to pay 20%. And then up to 10, exceeding 10 lakhs, you have to pay, because this amount is 10 lakhs. So exceeding 10 lakhs, you have to pay 30%. Okay. So that means your tax will be 2,62,000. Okay. So then you just total it this. So your tax comes to 3,74,000. And then on that, you have to add 4% cess. So when you calculate your tax, you have to add cess on it. Okay. So which is, 4% on your tax. So that means your total tax will be 3,89,000. Is it okay? In the old regime. In the new regime, your rate is, your income is 19 lakh 41,000, 19 lakh 14,000. Okay. So first 3 lakhs, no tax, zero. Next 3 lakh, 5%. Then next 3 lakhs, 10%. Then next 3 lakh, 15%. Then next 3 lakhs, 20%. Okay. Then the balance amount, which is, which is basically, this amount, if you just do this, so the balance amount will be 30%. So which is 4,14,000. So total income is 19,14,000. So you pay a tax of 1,24,000. Okay. So that means your total tax will be 2,74,200 if you just total up everything. Okay. Fine. And then on that 4% says, so your total tax will be 2,85,168. Now tell me which is better, the old one or the new one?
New one.
Which is called the default. So if you don't choose, automatically your tax will be calculated by the tax software based on the default tax scheme, unless you opt out from the default scheme and say that I want the old regime. Okay, then only it will go. But in this case, you will not opt out, because you will say that I want to remain in the default scheme, I don't want the old scheme. So here the government has, what the government has done, it has actually lowered the tax rates, okay, so that you pay lower tax without claiming any tax deduction. What people are doing is that people are saving a lot of money and the government are getting less taxes. So the government wants that, people should pay full taxes without taking any deductions. That is the motive basically, okay. So they want to ultimately move on to the default tax regime where you will not get any exemptions. Maybe in next couple of years from now, the old tax regime will go away and you have to pay tax at a lower rates. Okay, fine. Now, if you look at the tax, total tax of 2,74,000. Okay, so this is what you are paying on the amount. Okay, fine. So this is there. Okay. Now, in case of Ramesh, for example. Okay, Ramesh, his old regime was 8,27,000 and the new regime, default regime was 8,34,000 because he had only one deduction, which was 7,000. Okay, fine. So let's go to the tax calculation again. And again, using the same thing, you find the total tax is 3,75,000. Okay. And here it is coming to 2 lakhs. So which is better for Ramesh, who's a non-resident? Should he go for old tax regime or default tax regime?
Default tax.
Okay. Now let's go back to this question. Okay. And go to the answer here. Suppose, let's just focus on here. 80C. Of course, the maximum reduction is 1,50,000. Suppose, let's say that there are some more deductions. Suppose he's getting, total of say 3,70,000. Suppose, I would have included some other section here also, an 80G or something like that. Okay, which we'll understand later on. Suppose there are some more deductions, so his total is coming to 3,70,000. Now, what will happen to this thing? So let's go to the tax calculation and see which is better now, old regime or new regime?
Old.
Sir, old one.
So that means what we have done is that if we have increased, suppose there are a lot of deductions, nearing to about 3.5 lakhs and above, then you will find that the old regime is better. So if you have a lot of deductions to take place, then the old regime becomes better because you get all the deductions. Okay. But suppose this was, like for example, this was only 1,50,000, which is the limit. Okay. So I'm just removing this. I'm saying there is no 80G here. I'm just saying this has 1,50,000. Suppose you have taken the entire deduction, okay, which is available. Now also if you go here, so which is better, the old regime or the new regime?
New.
So that means only if your exemptions cross, 3,60,000 or 70,000, you will find the scheme is better to go for old regime. Otherwise, the new regime is always. Now let's go back to the same thing. Okay. So here, so we find here that the old regime is, the default regime is better. Have you understood, everybody?
Yes.
Anybody who has not understood, I can explain again. Just go back to, let's go back to the screen now. Okay. So Kajal, have you understood?
Yes.
What about Kishore?
Yes, sir.
You are asking the question, to explain the old, the regime and the new regime. Okay, you said we want to learn that when we started the taxation journey.
Sir, in the new tax regime,
Yeah.
we don't have any of the deductions that you have shown now.
There are, we are going to learn that. Okay. I have shared also a link where, the deductions which are not allowed under the new regime. Of course, there are some deductions which are allowed, but there are hardly any. Okay. So the new regime which the government wants to promote, they want to say that, we don't take any kind of a deduction. Okay. But there are certain permissible deductions which are allowed. Okay. And I'm going to just share with you. I'm just going to show you that also. Afterwards
Okay,
I checked
sir.
from others. Tejasvi, have you followed?
Yes, sir.
Okay. Suraksha,
Yes, sir.
Dia,
Yes, sir.
Manu,
Yes, sir.
Arvind.
Yes, sir.
Okay. If you have not followed, just go through my, Excel. Sanchit, have you followed Pratishtha?
Yes,
Everyone?
sir.
Okay. Fine. So,
Yes, sir.
so you can just go through the Excel sheet. Okay. Yourself. Fine. And, just go and just change some numbers here. Okay. For example, if you change anything, the figures will change. Suppose I make it, 5 lakhs here, and I make this as, well, I make it this thing. Okay. So what will happen? Let's go to the, the answer. So of course, the figures are coming minus, which is not there. So maybe that, we have to put some number. So I have to.
Sir, your screen is not visible.
Achha, not visible. Okay, I'm away. Achha was screen visible nahi hai because I was not getting the right answer. Anyway, I'm just changing the screen. Okay, is my screen visible now?
Yes, sir.
So now,
Yes, it is visible.
now you can understand, which I have some, you have some idea, how to calculate and understand which schemes is better. Now tell me one thing: if you have plenty of deductions, suppose you have 5 lakh rupees of deductions under section 80, under chapter 6A, this is called deduction under chapter 6A, like ATC, ATTTA, and so many others are there. If you have 5 lakh rupees of deduction, then you will go for which scheme? The new scheme or the old
Sir,
scheme?
old one.
Huh?
Old one.
Old one. Okay. If you have very less deductions, then of course the new regime will become better one, isn't it?
Yes, sir.
Okay. So that you should keep in mind. And last time, I had given you as per the book. I'll just show you what the book says. Okay, which is income, the basics. This thing. So let's go and see this. Income tax. So, what are the first we'll understand, like Suresh was asking what all is not deductible. Okay, so we'll take that. Before that, we will just go to the broad conclusion. Kishore, can you read this?
Uh, broad conclusions. If the quantum of blocked incentives is more than 3,75,000, tax liability will be lower under the regular tax regime. If net income exceeds rupees 15 lakh but does not exceed rupees 5 crore. In such a case, if the quantum of blocked incentive is less than 3,75,000, tax liability would be lower under the alternative tax regime. In other cases, one must separately calculate tax liability under the regular tax regime and the alternative tax regime to find out which one is beneficial.
So it says that if the incentives are more than 3,75,000, then under the regular tax regime, which is the old regime, regular is the old one now. Okay. So this should be read as old. Okay, I'm just going to put here. This is the old scheme. Okay. Now it has become old. Okay. The quantum of blocked incentives more than the tax liability will be lower under the old regime. Okay. And if the net income exceeds but does not exceed 5 crores, okay, fine. In such case, the quantum block less than 375, then the alternate tax regime. This is the new one. So I'm just making a change here. I'm going to share you again. So now the old regime. If the the deductions are more than 3,75,000, then that becomes better. Okay, fine. So just let's understand this little bit. What are there?
Hello, sir. I'm facing an internet issue. Sir, Arvind can read now. If
Okay.
Arvind is there,
Now these are. I'm just going to read. Okay, these are the deductions which are not allowed. Okay, now if you want to go for the new regime, LTC. Like when you're working in a company, you are getting leave travel concessions. Your parents might be getting and you're traveling, and they always say that you don't have to pay tax on whatever money the employer is giving you, either an LTA or tickets for traveling. So though that is your income, but you don't have to pay tax on that. So that's called LTC. So you can't take the benefit of LTC. Okay, so our entire LTA will become taxable if you, have to go for the new tax regime. Okay, then HRA. So if you're staying in a rented accommodation, you are allowed some deductions. So those deductions will also not be allowed under the new regime. Okay, so like this, deductions under section 80C to 80U. Okay, so like this, there are many more. So we'll be doing them as we go along. So I don't want to do it today because some of the things we have not done so far. Okay.